Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall. I'm Eric Auskerson, one of your hosts for today. We've got a power hour in store for you. There's a lot of breaking news and a lot of information that we look forward to providing to you. So to kick things off, I want to welcome both Mark Peterson and Lisa Simpson up with me. And what we're going to be, kicking things off with today is first and foremost the DC and profession update. I mean, there's been active weeks in Washington, D.C., but it seems like as busy as it can be, Mark, between the funding of the government and this new tax legislation and all kinds of other matters worked into those two elements. After, I'll clear the agenda and we'll jump right into this opening discussion with you, Mark. And then Lisa, we've got a lot going on with the technical updates. You're going to also contribute to some of the DC and profession update with Mark. We've got a great small firm segment with Carl Peterson. We haven't had Carl Peterson with us for a while. Carl does the small firms corner, and you and Carl are going to be talking about tax season, hot topics, some resources we have. And then we're going to be bringing in Nicole Davis, a practitioner who's going to be sharing some of her strategies related to the tax area. And she's well known with our tax Twitter community. So Lisa, Mark, welcome. Great to have you.
Great to be here, Eric.
Thank you.
So Mark, we plenty of material. So kicking things off, and you're going to be bringing some breaking news to the town hall community, both on this funding, the extension of funding for the government, as well as the tax legislation. But let's start off with what's happening with these funding deadlines.
Sure, absolutely, Eric. No, they've pulled the rabbit out of the hat again. If you remember, we were under a short-term funding mechanism that was going to get us to midnight tomorrow, midnight on January 19th for basically half the government, with a second deadline for a potential shutdown on February 2nd. That second shutdown included Treasury and the IRS, which would have had obviously a massive impact on the profession. So a couple hours ago, the U.S. Senate passed a stopgap funding measure, continuing resolution, CR we call them, with about 78 votes. So a strong bipartisan vote. Now it's up to the House. I've just been informed that they continue to move up that vote. So it may actually occur while we're on the town hall here, Eric. Part of the reason for that is there's a pending snowstorm here in Washington, and that does push a lot of bipartisanship because they all want to go home. And so the way this is going to play out, we think, is that under an expedited procedures mechanism, which requires a 2/3 vote in the House, the House, we're betting, is going to pass this measure in a bipartisan way, obviously, because it needs a 2/3 vote, which will get us into those March dates, March 1st and March 8th. So basically, it's the same setup of half the government would run out of money on the 1st and the second half on the 8th. And the IRS would be included in the 8th. The goal of this, and the appeal that Speaker Johnson is making to the House Republicans anyway, is that will give them time to go through what's called regular order, which means they go through each of the 12 appropriations bills. They don't do a single funding mechanism. They go through the bills go through committee, they're voted on the House and Senate floors, and then they go to the president. That's a tall order. So there's still a lot to play out between now and the 8th. The problem with the March deadline, as anybody who does taxes is going to know, is this still could have a shutdown impact on the IRS and Treasury. So we're not out of the woods yet. We continue to discuss both with the IRS and with the Hill about potential mitigation strategies in case there is a shutdown that would impact the IRS during tax season, Eric.
Yeah, so Mark, I mean, we had anxiety on this February 2nd date, and now, I mean, it is right in the heart of tax season, this March 8th date. So progress, but in some ways increasing risk. And Mark, one thing about your snowstorm, just for the audience here, we got people all over the nation. We just got somebody who said they're coming in from Mexico today. But you only got 1 inch forecasted in Washington, D.C.
I didn't say it was much, Eric, but again, they like to get out of town if they think flights are going to get canceled.
That's right. Well, Mark, the thing that everybody's talking about is this bipartisan tax deal. I mean, you've been talking about this
Yep.
potential for the past year, and all of a sudden, we actually have. If you click on this link here, we've got the full legislation available from Town Hall Community.
That's right, Eric. So we were calling it a year-end deal last year, where basically there was this bipartisan deal out there that would couple some business provisions along with the child tax credit, and then on top of that, there were discussions about maybe a SALT fix. We had our safe harbor issue related to extensions at 125%, 174, Lisa. So there was a expanding and the threshold on 1099Ks. So those were all floating around. Obviously, the year end didn't happen, but there's still support to get this done. And so this bipartisan deal, and it's important that you note Wyden Smith. So Senator Wyden, Democrat, leader of the Senate Finance Committee, and Congressman Chairman Smith in the House Ways and Means and Committee. So that's bicameral and bipartisan, one Democrat and one Republican, have pulled together basically that deal. Now, we're going to go through some of the elements of it. We got the text yesterday, so we're pouring into the details, but we can kind of give you an overview. Some things didn't make it. That doesn't mean they're not going to happen, but they didn't make it into this bill. A lot of this, too, and this is going to be very relevant for the town hall, is paid for. So they had to do something in order to pay for the provisions that they were extending through accelerating the deadline on ERC, which is definitely going to have an impact, and we need to make sure that the town hall community is aware of that.
Yeah, we'll talk about that, Mark, but that's kind of creative funding to move up the ERC deadline, and that, I mean, this is the pandemic relief program that just kept on giving funds out. But as you said, I mean, that's a huge chunk. It's like $70 billion, right?
Oh yeah, no, it is. It's basically funds over 90% of this package. So it's about an $80 billion package, and the vast majority of the funding comes from these changes to the ERC.
Well, here's some more details, Mark.
Absolutely. And so some of the elements, we did see the addressing research and the R&E tax credit experiment. The other thing is the extension of bonus depreciation, and then extension of Section 163J. So those were basically the three business elements that were included. There's also an increase in the maximum on Section 179 expensing. Some issues related to very specific things around disasters, very limited. Some hurricane relief for Hurricane Ian. There was, you probably remember, there was a train derailment in Ohio, East Palestine, Ohio, where there were chemicals aboard, and there was some disaster issues there, and there's funding in there for this as well. And then the changes to the employee retention tax credit, which actually would move up the end of the program to January 31st of 2024. We're going to talk about the likelihood of this bill happening, but people have to pay attention regardless, because there's going to be a lot of focus on ERC regardless of what happens to this package. The other thing was extension of the statute of limitations to 6 years on ERC, and then penalties for bad behaviors around promoters as well.
So Mark,
sorry.
I think it's important to call out that there are retroactive changes that would be viewed favorably by most of our business clients, especially the Section 174 R&E, being able to immediately expense that if it's U.S. based research. There's a little carve out if it's foreign. But that's something that I know your team has been advocating for relentlessly, and that we always make sure everyone knows is on our radar. So that's the good news, is that would be factored in if this deal passes. The the trade-off is that it's retroactive. So some of those conversations you've been having with your clients, and some of the tax that they've already had to pay in through estimated tax payments could result in a pretty big overpayment if this passes.
And we'll talk a little about the if.
Yeah, Mark and Lisa, a number of questions coming in. I think maybe each of you can kind of help address some of these. It's related to ERC. One is for those applications that have already been submitted, and they're waiting on treatment being paid. How does this deadline impact them? And then secondly, since is what's our recommendation if you have a client with a legitimate ERC claim? Is this something that we're recommending they get in right now? And how does the moratorium affect that? So one is a claim was submitted and waiting. Another one is want to get a claim in right now. And is there any impact due to the moratorium?
So the moratorium is on the IRS processing claims that have been submitted, but filers can still submit ERC refund claims now. They've been able to do that. The moratorium is just on the IRS processing. We have not heard anything more definitive about when the IRS might lift the moratorium on processing. But Eric, to the main question is, if you've got a client with a legitimate ERC claim, when do you file? You file now.
Absolutely. And let me make a point on that. So there, and I'm going to get into the politics about whether this bill passes or not. What's the likelihood? But we're hearing, numbers like 95% of ERC claims are coming in fraudulent. Something like we heard from committee that $3 billion a week are coming in and that are considered fraudulent. So there's going to be a focus on addressing ERC from a policy standpoint, potentially outside of this. So I would move quickly if you have legitimate claims, because I think a deadline's coming.
Yeah, the time is now, but if you get those claims in by January 31st, and as Lisa said, the processing does not impact the statutory date of January 31st. So,
and
Mark,
Eric, really quickly, because you might get more questions about some of the details that are in that bill.
Yep.
The link that's in the slides gives you, takes you straight to a really nice written summary of what's in the bill. So it's going to talk about the increasing maximum 179 up to 1.29 million. So a lot of the details are in that link, and they're easy to read.
So Lisa, a lot of positives. I mean, there's some angst here with how it's being funded, and maybe some firms having now to have to rapidly put in the ERC changes. But this is something that the client base in general should be, take rather favorably. With all that said, it is happening during tax season.
Yeah, exactly.
Yes, it is.
So Mark, you covered some of this. I don't know if, how the bill advances or dies.
So let's talk about this, Eric, because it's precarious. It's very fragile. I have said bipartisan, but it still has to make it over the finish line. And there are some relevant issues related to that. So the Ways and Means Committee is actually sticking around through the snow that we're expecting to try and get this marked up or considered in Ways and Means Committee. Chairman Smith is discouraging amendments. So he's trying to get it out clean because he's concerned that amendments would make passage on the House floor more difficult. We're going to watch that play out today and tomorrow and see if the Ways and Means Committee can get it out. We anticipate that Ways and Means will get it out of committee with a bipartisan vote. There'll be maybe a couple no's, but then it goes to the House floor, and that's where there's a real question. There is some discussion about trying to do it under an expedited procedures, which is what's called a suspension calendar here on the second bullet, which means that it requires a two-thirds vote. It would have to be bipartisan. Usually it's things that are non-controversial. One of the elements of that, though, is there's no amendments are allowed. So there's a question about, will there be enough votes to get two-thirds, making both sides happy? And then will there be frustration because it's going through a process where they will not be allowed to amend it? There are not a lot of tax packages that are out there, so getting a shot at one that's moving is a big deal. That's a question. Then we got to figure out what happens in the Senate. Again, Chairman Wyden of the Finance Committee is one of the authors of this, co-authors, and is interested in getting it moving. But you get back to the amendment issue. Can they put it on the Senate floor, which has very different rules than the House? It's much more difficult to shut down amendments. without having it amended with things that will hurt the vote. And so there is a long way to go. There's a lot of pressure to try and get this done before tax season starts. What is it, on the 28th, Lisa?
29th,
So
yep.
29th. They've got a lot of work to do to make that deadline. So we're going to watch this play out. If the big question about whether they're going to have amendments that are poison pills in the Senate, and whether the House will put up with the fact that it's unamendable, and then let's see if the votes are actually there. So we're going to watch this play out.
And Mark, questions coming in with the chance they push out the January 29th start.
I doubt it.
So this will be something that we'll be talking about in the next town hall, and if there's more information that probably will come out, we'll make sure we get that information into the newsletter next week. So another hot topic for the town hall community, Lisa, beneficial owner information, BOI.
I always like to show just the highlights of some of the main provisions in case we have new attendees on town hall who haven't really gotten familiar with beneficial ownership information. You might also hear it referred to as CTA, Corporate Transparency Act services. And so here are the highlights on what the reporting requirement is. What I really want to call your attention to on this slide are the resources. The FinCEN Small Entity Compliance Guide is very helpful. It gives you flowcharts, it gives you details, and it's going to answer a lot of the questions. And then the AICPA's Beneficial Ownership Information Resource Center is also chock full of information, including templated communications to your clients so that you can help them get more familiar with it. We have so many questions every week about BOI, and a lot of them are covered in this podcast that I've highlighted on the right side of your screen there, Traversing the BOI Reporting Requirements. So if you are playing catch up on BOI, I'd highly recommend that you check out the podcast and look at some of those other resources. But Eric, I know we wanted to talk a little more broadly about the BOI landscape, what's going on.
Well, Lisa, yeah, exactly. And I'm a sailor, and sometimes it's foggy, and it's hard to figure out exactly where you are. You got to look at GPS and other systems. And right now here with BOI, I think we're in that stage where the training materials are being developed. The solution providers are beginning to release their products. More guidance is coming out. We're going to be talking more about engagement letters in the next town hall. And service providers are beginning to announce these offerings. So you're with all these different capabilities coming to fruition, it's going to get clearer. And as you just noted in the last slide, unless you have a new client, a new filing, you do have till the end of the year to file the BOI forms. So this is something that patience. We've talked about this before when we've had other types of information come out regarding new policies, be it PPP, be it ERC. I think patience here could help, and we're going to start providing more information related to these different resources. I've got right here. I've got a file, offering here from a major service provider. H&R Block announced their BOI capabilities. So Lisa, I know this is something that you're very active with our different technical committees. We had Aon and CNA with us 2 weeks ago, and we're going to continue this discussion in more in depth on the next town hall with Barry and others.
Yeah, and I think I would just point out something that we talked about last time very quickly is that there are a lot of solicitations going out right now that your clients may be receiving. I've gotten a couple of examples, so thank you for those of you who have sent them. And they look very official and they look very scary. And they're saying, you fill this out and you send me your check or you're going to jail. So, I think increasing your clients' awareness of the reporting requirements and asking them to, just be patient and to continue to follow along with us as we get more and more information about it, I think will help everyone.
Mark, anything from the DC side?
No, we are still in conversations with the committees of jurisdictions about the potential to suspend, because we're encouraging everybody to do this, but there's still a lot of questions out there. I don't have an update on that. Again, they've been focused on funding the government, but I will also tell you that as we get feedback from the town hall community and the committees, we are getting that into FinCEN to see if we can have some level of mitigation to some of the challenges that we see.
So, Lisa, a lot of the normal questions coming in, should CPA firms provide this service, wanting, better understanding of the forms. So again, I think this is something that is going to be a work in progress. Hopefully by the end of February. I think by the end of February, I mean, it's January 18th, right? January 18th today. We're going to have a lot of these different elements: training, solutions, more guidance, engagement letter, best practices, and there'll be service providers. So even at the end of February, you still would have 30 days, Lisa, to support any new entities that were created. So that, and once you understand the process, 30 days probably is enough time. So that's what I would say. We can stay with us, and we're gonna really work hard on answering these questions for you. So Lisa, any other closing remarks?
I think that's perfect.
Okay, perfect. All right, so Mark, we're shifting gears a little bit here, but just want a big announcement from the SEC related to Bitcoin. And they kind of announced it twice. They announced it one day early, and then they made it official the next day. Well, I'll have you comment in a moment. We just held a few months back, we held a blockchain symposium. And, 2022 was a rough year for the crypto markets. You had FTX that happened right at the end, and then everyone was like, what's going to happen? The crypto winter. It has thawed a little bit, and this is a significant announcement by the SEC. And from the blockchain symposium, we've got a summary of that discussion there. There are more and more guidance that's coming out related to digital assets, and there's more information related to how firms are supporting this segment of the market. So I think, Mark, this is something that we're gonna continue to watch. We will on a future town hall, have a broader session discussing some of this additional guidance and the evolution of this area.
No, there's going to be a lot to talk about, Eric. But basically, the SEC made the announcement that they're going to allow ETFs, Bitcoin ETFs, on the exchange. About I think 11 firms have been allowed to do it, which obviously puts the consumer in play with an ETF without actually owning Bitcoin. So there's going to be it's controversial. There's going to be a lot of discussion about it. There's still a lot of oversight and review related to crypto that's going on Capitol Hill, and then there's a lot going on in the market, and I think that this is going to accelerate all that, Eric. So there's going to be a lot to talk about.
Yeah. Okay. Well, Lisa, I'll hand it off to you for some more information on ERC.
Thank you. Really quickly, as a reminder, the IRS announced back in December about the voluntary disclosure program that allows entities who might want to repay the ERC do that at a 20% discount. And I want to continue to reiterate the limited time offer on this, because it is important, and it conflicts with tax season. So this offer has to be made online. The filing has to be done online by March 22nd. So you'll see that we have coming up on January 25th a webcast that helps we have a couple of practitioners, Dan Choden and Chris Wittich, who are going to be navigating the ERC voluntary disclosure program with us, so that you know how to work with your clients on it. So I think that's going to be a really important one, and would urge you to try to get that one on your calendar. Another ERC topic that I wanted to bring to your attention is one that we talk about annually about this time every year, and those are the audit considerations related to ERC claims. Because you might have a client where you're doing an audit and you don't think that they were eligible for ERC, but they had filed for it and received it. So this is a really good in-depth article from Bob Durack, who leads our Center for Plain English Accounting, and Mike Westervelt, who's one of our amazing volunteers with CLA. And they go through some of those detailed audit considerations that you need to be thinking about if your client has taken an ERC claim and you're not quite in the camp of, yeah, that was the right thing to do. So quick ERC update, and then just some more hits on IRS news. As we talked about earlier, they have announced that January 29 will be the date they'll open for accepting and processing 23 individual tax returns. Now, again, if this retroactive legislation goes through, will that get pushed? Not sure. There'll have to be a lot of reprogramming, so we'll see how that goes if that legislation gets through. And then a recent announcement that the IRS made related to a provision that had been included in the Infrastructure Investment and Jobs Act that basically required taxpayers, business taxpayers, to treat digital assets, so Bitcoin as an example, as cash in determining whether or not they received cash in a single transaction over that $10,000 threshold that is required. So we're happy to see that they've announced this delay, because that was something that we had been advocating for very strongly until all the final regulations had been issued. So some good news there. So from a technical update standpoint, I wanted to keep it pretty quick because we're going to spend some time talking with Carl Peterson, who is our Vice President of Small Firm Advocacy. Carl's a regular guest on here, and I'm happy to welcome him back because, it's there's a lot going on with firms right now as they prepare to get ready for busy season. So I chatted with Carl earlier. We picked out some hot topics that we thought we could hit on pretty quickly, and then we'll bring in Nicole Davis for the practitioner perspective.
Absolutely.
So welcome, Carl.
Thanks, Lisa. This is an exciting time. It's always before I came to AICPA, it used to always be my favorite time is those first few weeks of tax season, just anticipating it's going to go extremely well. So high hopes for this year for everybody.
I think everybody does have fairly high hopes, except for this, little issue about retroactive legislation changes. But what are you hearing from firms about their satisfaction with IRS service?
Well, actually, generally what I hear, it is, slightly better. I mean, there's some frustrations with being able or unable to fax, POAs to agents because the agents are having issues with their fax numbers and the equipment that they're using. But outside of that, it's been fairly positive. And then the real positive news actually has been from some small firms that I've been meeting with and interacting with, emailing with, who have identified that, told me that they're using the Tax Pro accounts that are available. And I don't think they've been used very much in the past, and really getting a lot of positive feedback from CPAs that are using it. One CPA, that uses the Tax Pro account tells me that you can click on a client under the taxpayers tabs. And I don't know if anybody's ever been to the Tax Pro account yet or signed up for it, but there's a taxpayers tab and you get an overview of all the taxpayers that you actually have authorization to view. And he tells me that, it's good information on the taxpayers account without having to log into each individual account and get an account transcript. So that's pretty cool. You can also check estimated tax payments, account balances, information that you're authorized to see under your POA. And then I was with another networking group last week, and there was a IRS tax liaison there, and he said they're getting positive feedback as well, and they're really on their roadmap of expanding its capabilities and uses. I think it's one of those things that everybody should maybe have as a tool for this year and start playing with and see what might help them get some information to finish those returns.
And I know that as the enhancements have been rolled out over the course of the last year, our advocacy team has really been cheering all of that on because we've been pushing for this modernization of the IRS. And this seems to be a big step forward in that. ERC Voluntary Disclosure Program, we just spent some time talking about that, but what's on your mind about that?
Well, my concern about that is really, how important it is to take a look at that, because that program deadline is March 22nd. And, that's right when everybody's, just finished pushing out business returns. There's not much time to get these things done. And I wonder whether or not it wouldn't be a good idea to identify those clients that probably used ERC Mills, or certainly didn't use your firm to prepare the ERC application, and make sure that you're comfortable and the client's comfortable that they want to or don't want to participate in the voluntary disclosure program, and maybe look at extending their business return and focus on helping them through that process.
So speaking of extensions, I know the next topic is one that you're pretty passionate about, which is going ahead and getting extensions filed. So
Right.
what's your perspective?
Well, I'll tell you, you every year we have the same clients that extend each and every year, whether it's a business client, a lot of our pass-through entities, you don't have all the data and information to get it done. You go ahead and you know which ones those are. You know which individuals you're going to extend as well, typically year in and year out. Why not do that now before you get so heavy into tax season? You know who they are. They don't mind. Talk to them, get it done, and relieve the pressure that you're going to have as time goes on here for tax season.
Boy, you're setting me up for the next bullet, pressure. I've been talking with a lot of firms about how they're approaching tax filing season, capacity issues, talent management. And I know that that's always top of mind when you're talking to practitioners as well. What are you hearing?
Again, I'm a glass half full guy. Maybe everything I hear is positive, but I think I tend to hear a lot more positive things in this environment too. The hybrid work environment seems to be allowing, staff to have a little more flexibility, not only when they're in the office, but when they get the work done. And you think about capacity, having that capability to live with your family and deal with family issues that you have to deal with, but also maybe not be pressured to have those, Saturdays that are required to be in. With a flexible and hybrid work environment, I think we're seeing firms be a little bit more flexible and saying, okay, let's don't worry about when you're doing it. Let's just worry about that it gets done. And having that capability to worry about the output and the production, I think is key. And I'm probably going to veer off here a little bit towards timesheets. I'm not a big advocate of using timesheets. And, firms are starting, I think, to look at the right metrics or the more things that I think are maybe more important, which is the outputs, right? Let's don't worry so much about when they're in the office doing the work, putting the time into their timesheets. Let's worry about when is the work getting done? How are they communicating with clients? What's the turnaround time? Let's look at the outputs from a positive standpoint.
Yeah. And we had a PCPS executive committee meeting last week, and I got, just some great feedback on what firms had done to get ready up to this point. A lot of continued client right sizing or culling, whichever word you want to use, raising minimum fees, setting deadlines on when the information has to be in, and just kind of managing the client expectation along the way, as well as working with your talent, the people within the firm, on clear expectations of workflow and deadlines, so that they meet the requirements, but maybe they do work at 10 o'clock at night after the kids have gone to bed or whatever. So to your point, not mandating Saturday in the office, but just being clear about expectations.
Right. I think this is the time of the year when staff retention is a challenge, right? A lot of staff get burned out during tax season, and I think with the new environment and hybrid and not putting that pressure to be in the office on certain days necessarily, or on Saturdays, like you say, have that flexibility is going to make a big difference on retention. And one of the things, you talked about, I've heard more firms this year over the last actually 2 years that have been raising their minimums, or maybe some firms finally establishing a minimum fee. A lot of them are raising them. They know there's room to raise them. And then also a lot of firms have talked about culling the clients. And I think we've talked about this, and I know I've talked about it with Nicole as well. And that is, our firm, reason we get rid of clients wasn't so much the dollars. It was really not they caused us stress and anxiety. And it's like, we don't need that. Nobody needs that.
Yeah. That's great. All right. So let's shift gears and let's bring in Nicole. We've been waiting for, I'm sorry, let's not shift gears yet. Our tax section has been put together some amazing tax season resources for you that I wanted to call your attention to. I will personally point to the J of A Filing Season Quick Guide. It's super helpful. It's a 2-pager that you can quickly and easily print, keep at your desk, keep the PDF pulled up, and it's got all the pertinent numbers that you're going to get asked over and over and over again. We also have some webcasts coming up, and our Reimagining Your Tax Practice sessions, which have been so popular. So shout out to the tax section for putting all these great resources together for us. All right, now let's bring up Nicole. I've teased you guys long enough. So Nicole Davis is the founder of BD Accounting. It is a small firm outside of Atlanta. And many of you know Nicole. She's been a repeat guest. She is an avid volunteer. She's been a key part of the Reimagining Your Tax Practice series. She serves with me on the Professional Liability Insurance Committee. She's co-chair of Engage. She's, as I've said before, she's here, she's there, she's everywhere. So welcome back, Nicole. I'm so glad you're here with us to talk about your tax season strategies.
Thank you. Thank you for inviting me on today's town hall.
Absolutely. We had a previous chat, and Carl, I know you and Nicole had a lot to talk about. So I'll let you get started, and then I'll just jump in.
Okay.
Well, yeah.
Go ahead, Carl.
Hey, Nicole. So I was just thinking, on this slide, it talks about streamlining workflows.
Yes.
And, over the last couple of years, one of the things I do after tax season is meet with firms and say, what is that one thing you would have done if you could do it over again? And so often it's all about workflow. It's like, you know what, I would have gotten rid of that spreadsheet to that I track my workflow on, and I would have implemented maybe, some tax software or something else in that process. How do you approach your streamlining your workflow? What got you to where you are today?
So I would say that when I'm thinking about my strategies, I'm always thinking about aligning those strategies around two sets of people, and they are my clients and my team. So for me, the first thing we do is look at our workflows. So we want to streamline and optimize those as much as possible. So that could be anything from your intake process all the way to overhauling how you actually prepare and deliver their tax return. So for instance, about 2 or 3 years ago, we completely got rid of paper organizers because they were just very inefficient. And so we introduced an online form that captures the engagement letter, the organizer, and the disclosure. And no client can be a client unless they complete it. So we have a 100% adoption rate because of that. So that's one of the things that we worked on as far as streamlining the intake process. Also, too, we try to look at ways to eliminate or reduce those bottlenecks in the processes. Now, it may not be a process. It may be a person. I was one of those people that was a bottleneck in my firm. And so my team kindly said, hey, we need you to get out the way so that they can be the best version of themselves, that they can best serve our clients. So that's kind of how we look at how we approach looking at our processes and procedures and how we streamline and optimize our workflows.
Yeah, it's interesting. What you talk about the portals and the organizers being online and everything like that.
Yeah.
And I know we've had this conversation before about the age of your clients and whether or not they're accepting the use of technology. And I just want to point out, 12 years ago when our firm went to e-organizers and the portals, we required everybody to do it. And it didn't matter what age our clients were. Everybody did adopt it. And, everybody was better off. We were much more efficient and everything else. So that's good to hear.
Yep.
Yeah. So what about your communication? I think it seems to me you guys have done quite a bit on implementing maybe a new process with communicating with clients, not only the electronic organizers in that system, but also I thought you said something about text messaging the other day.
I did. So once we reviewed our workflows, we want to make sure that our tech stack aligns with our workflows. And part of that is how we communicate to clients. So I believe that there's no such thing as over communication during the tax season process. Mainly, we communicate with clients 4 ways. We use broadcast, we use email, we use text messaging, and we also use the phone. So last year we implemented text messaging because it allows for real-time collaboration and real-time communication, because most people have their phones always in their hands or really close by. So we found that we actually got a higher response rate when we text a client directly to request maybe an ID because they didn't submit it, or we needed additional information about their situation because something just didn't seem complete. So text messaging has been something I was apprehensive about before, but now I fully embrace now in my firm.
So is that a separate tax application and software that you're using for that?
Yes, we do use a virtual text messaging service so that we could add our client, we can set up keywords so that we can send out broadcast messages through text messaging. So one of the videos we send out is the tax season explainer video. So now clients receive the video through text message and a link, and they cannot say they didn't watch the video, and we're going to require them to say that they watched the video.
That's interesting. Is that I'm just curious, is that software integrated into
Tax
your other?
software?
Yeah.
No, it's not integrated in our tax software, but we are figuring out how we can integrate it in our practice management software so that we
Okay.
can have all of the communication between the client within their tax return
Gotcha.
project.
Okay. So now that we're
Nicole-
what, January,
Mhm.
18th today, how have you been preparing your tax season team,
Yeah.
before that all comes on us?
Right. Before we start running mad. So we have a couple of tax season kickoff meetings. And during these meetings, we are looking at like what changed in the process. What are we adding new that we probably need to educate not only the team on, but the client on as well. So we have a series of meetings around that first. And we also ensure that all the team is up to date on how to use the software. If there are any changes within the software or the tax law, they need to be made aware of before we start bringing clients in and preparing their tax returns.
Do you mind if we touch on capacity in a sense?
Yes.
I know you guys have, I think, utilized offshore staff.
We do. Yes.
And I think a lot of firms coming into the season right now, hopefully all the firms are ready to go and have already, determined how they're going to handle it.
Mhm.
But I'm sure there are firms that are still concerned or might pick up new business that, we don't have capacity.
Right.
Can you talk about your offshoring experience and how you identified the right answer for you?
So we started looking offshore because of the capacity issue that we were having finding skilled tax professionals in the States. So for us, it has been a total game changer in that we could, and mainly we do a little differently, probably from most firms that offshore. We only give our offshore team our business tax returns because we have standardized that process to a point to where we assign them a return. They complete it within 2 or 3 days. They send us back all the work papers. All we got to do is have the technical review on the senior side before we send it to the client for review. And depending on your tax software, like we of course get disclosure. And here's the thing: we get disclosures from all our clients, even the individuals, letting them know, hey, your social security number may be exposed or may be shown to an offshore person. So we get that disclosure for everybody, but we don't outsource the individual returns to the tax team because those returns are just not as standardized because people can have a number of different forms. And then of course you got to redact all the socials on the form. So it's a much easier task to just offshore the business tax returns.
Yeah, that's interesting. That approach works really well for your firm and your practice, and I'm sure work the same for many other ones. But when I think about it, our firm used to outsource offshore, and when I was in practice, and we did it kind of opposite in that we looked at it. We're so heavily involved in business returns. Our practice is like about 50-50. So all these business returns we're doing, as the individual data came in, we would send that to the offshoring company, right? Because we wanted it to be started because we couldn't focus on it before March, 15th. So there's different ways to approach it and different solutions, I think. So that's interesting.
Hey, Nicole, can I ask you a question? Because I want to go back to client management, which I think is one of the things that I'm really enjoying seeing tax or small firm owners and firms of all sizes really start managing client expectations and managing client communications so that they don't overrun your people. And one of the things that I thought was interesting is that you were asking your clients to pay their tax prep fees in full in advance of you preparing the return. So I just wanted to talk a little bit about why you chose that and what kind of pushback you've gotten and how you're feeling about that.
All right, so we do require advance payment of all tax work in our office, mainly because we're trying to make sure we have capacity. So in our office, the pay return gets done because we're a small firm and we just don't have the resources like the bigger firms or businesses that can kind of float the work, where I have a team to pay. I got to make sure they get paid. So for me, it's all about capacity planning. It's also about working capital as a small firm. And then, of course, I always say people, I think we as tax professionals and accountants, we project our fears onto clients. And so I'm like, if you don't ask, you'll never know. So for me, it's like, I'm going to ask for my money up front. And I'm going to see what they say. And I have gotten very, very little pushback from clients. And when I do get pushback, I'm usually just like, hey, the pay return gets done in our office. We don't have to do your tax return. You can, there are many other firms that can do your return. But for us to do it, you have to pay in advance.
That's interesting. Carl, let me ask her one other question, and it's about the last bullet that we had there, delivering value.
Yes.
And you are famous for your pizza tracker concept. So I feel like we have to hit on the pizza tracker concept and let you talk about that.
Yes. All right. So the pizza tracker is a status progression tool that we use in our practice management software. So it allows the client to check the status of their return at any point in time without having to call or email us asking for a status update. And so we built it into our client portal so they can log in, they can see where they are in the process. And on the internal side, on our side, we actually built an automation so that when the status changes, it can do a number of different things. It can send an automated email to the client. It can create a task that goes to someone on our team. It could create a process that kicks off another process in our tax preparation. So it's all about, again, thinking about the client experience and also thinking about my team's experience. So I'm always aligning the tools we're using around that.
So you don't over communicate. Doesn't sound like it. You could always communicate more, right?
Yes, I think we don't communicate enough, and that's where a lot of the frustration comes in with clients, that they feel like they're being ignored, and so we wanted to solve for that.
Yeah, probably eliminates a lot of calls, follow-up calls to see
It
where things
does,
are at.
absolutely, yes.
Yeah.
Absolutely. We're going to click into some resources that I want to make sure everyone knows about. But there's one thing I have to point out that Nicole does with her team. She works really hard on managing burnout.
Mhm.
And Nicole, tell us about
Yes.
your half day Fridays.
Yes, so we're just like most tax firms. It's a very, very grueling tax season, but we always try to inject some fun during tax season. But our team always gets half day Fridays year round. No one's ever required to work weekends. They can leave as early as noon on Fridays to have that time to themselves. Because again, my team is my most valuable asset in my firm. And I want to make sure that they're happy, that they're not stressed out, and that they actually enjoy working for us. So again, we just try to make it a stress-free tax season because it doesn't have to be stressful.
And while we're bringing up the resources, Nicole, one of the questions we've gotten is, how big is your firm? We forgot to mention that.
Yes. So I have a team of 12, and 2 of them are offshore. So, and we do accounting, payroll, and tax services. We primarily work with 2 niches. That's independent pharmacies and construction companies.
Thank you. So thank you for this, Nicole. It was a great conversation. And as I mentioned before, Nicole has been so helpful in the Reimagining Your Tax Practice series that we do. As you can tell, she has a lot of cool ideas, a lot of innovation, a lot of tech solutions. If you want to learn more and sign up for that series, you'll find the link there. Nicole also mentioned having fun, and we want to give you some ideas on how to have fun. Excuse me. We got an example there of our busy season fun calendar, which is one of the PCPS most popular resources every single year. So it's going to give you some ideas on how to just generate some joy and have a little bit of fun during busy season. So all AICPA members can access that right now. So you've got the link there for you.
Cool.
Well, that was a great session, Nicole. You've got a lot of positive feedback and questions on the dialogue that you just had with Carl and Lisa. So I'm going to open with a question for you, and then Mark and Lisa. We got plenty of BOI and ERC questions as well. So Nicole, one thing about a lot of interest in your texting, exchanges with your clients. So how the security around that, documentation,
Right. Yeah.
so just a little bit more about
Yeah.
how you manage that process.
Yeah, sure. So we do use a virtual text messaging service, which is all cloud-based. So for us, we don't ask clients to ever send sensitive information through text or email. So we're not collecting like sensitive information where there could be a data compromise. We're using it mainly to get responses on quick questions, or like I said, we made it their ID may have expired and we quickly need to gather that information. I know some may think the driver license is um, a sensitive document, but like banks ask us to submit copies of our license through their portal. So it's a secure cloud-based text messaging service, and we mainly use it to get quick answers because we know that clients are near their phones or have their phones in their hands.
Very smart, very smart. Thanks, Mark. There's a lot of questions about, is there any, we talk about delaying BOI or rescinding it, but is there, changing in some of the thresholds, some of the requirements related to it? So is that another discussion that's going on right now with FinCEN or the legislators?
It isn't with the legislators. The discussion with the Capitol Hill on this is basically the way we left it at the end of last year, that we understand the goal, and we agree with the goal related to money laundering. However, there's just a lack of information out there for small business and awareness. But FinCEN has pushed forward. There was over the opposition. I mean, they got a letter from 80 House members saying to delay. So I think that the next potential step would be a request to suspend. We are talking to legislators again about a request to suspend. It's hard to do in the middle of potential government shutdowns. Having said that, we're making the case that they just need more time. We need more time. Thresholds have not really been part of the discussion yet. Maybe they could be. Maybe there's some opportunity, but they haven't been as far as us talking to Capitol Hill.
Lisa, do you have a chance to look at some of the hundreds of questions?
As usual, there are hundreds of questions. Nicole, we've gotten several questions about whether or not you have a minimum fee for your tax returns.
I do. My minimum fee for personal returns are right under $900. And then for business return, they start at $1,800 and scale from there based on the complexity of the tax return.
And I can just tell you from PCPS Executive Committee meeting, many more firms are putting in those minimums, and they've been increasing them regularly for the last 3 years, increasing that minimum fee. An episode of our Small Firm Philosophy podcast just dropped yesterday. There's an interview with Chet Buckman, who's with a firm in Kansas, and he talks about his journey of increasing that minimum fee, the palm sweating, the anxiety, but how in reality you get very little pushback because that means your clients understand the value that you're bringing. So
I want to add too that we actually, and I think again, there's fear around raising the prices, but my minimum fee used to be under $400, and this was just a little less than 2 years ago. And then I doubled that, and I again was trembling in my boots, like, oh my God, doubling my fee. And here's the thing: I did lose clients. I lost. Because I raised my fees 50%, I lost about 30% of my clients, but I made more money or the same amount of money with less work. So it was a win-win.
Smart business. It's business. That makes perfect sense. That's awesome.
Carl, maybe a question for you, related to, as a small firm, how you would think about BOI with all of the kind of, fog out there and just kind of, need for questions that haven't been fully answered yet.
Wow, that's a great question because I have thought about this because I put myself in the shoes of small firms when I meet with them all the time, and I know there are clients that if I was in practice today, there are clients that you will provide that information and you'll provide that assistance and do that work. Sometimes the conversations I've had with firms is are we overthinking it? Because I think you have so many clients that are so straightforward and simple and easy to know who the beneficial owners are. And so, I think this is an area that clients are going to ask for guidance and help. And first thing we have to do is create the awareness. But I'm sure we'd be involved in some fashion.
I did see on the North Carolina State Society's community forum that the IRS had sent out a communication. A lot of the angst has been around small business awareness of BOI requirements, and a lot of suggestions from our audience. Why isn't the IRS helping communicate? And they did send something out this week. I don't know if that was the first of many or if that was a one-off, but hopefully that will help with the awareness as well, Eric.
Well, one thing I would do, Eric, if I were in practice, I would make sure that, one, it's in my engagement letter, whether I'm doing it or not doing, or simply an awareness of it. I'd have it in my checklist. I'd have it in my tax organizer, and I'd make sure every client, whether it's a business client or an individual, because we all have those individual clients who all of a sudden they've been thinking about, I'm going to buy this rental property. I'm going to do something. I'm going to create this LLC. They create it, and they don't necessarily tell you until next tax season, and then it'll be too late for them to file their initial report.
Well, we're going to get more information to the town hall community. As we said, Lisa, it's January 18th. Hopefully by the end of February, we'll have gotten a lot more information related to it, and we're gonna definitely be discussing it in 2 weeks with Barry and others. Mark, one other question I just got to clear up for the town hall community. They want to know if you and Carl Peterson are related.
We are not. We are not, but we are both from Minnesota, the land of 10,000 Petersons.
That's
There
right.
you go. Mark, anything else from the DC area?
No, I keep checking texts. The team is letting me know whether the vote has started in the House, so we're going to hold our breath until they get the vote again for government funding this afternoon. And then, the only other thing is I'm sure there's lots of comments coming in on ERC, and moving up shutting down the program to the 31st. It's a challenge that's out there. I think that there's going to be a struggle because there's so much money that can be recaptured that they can use for other priorities, number one. And number two, I gave you some of the stats around the fraud that they're seeing. 95% of claims, $3 billion a week they're seeing coming in. And so we don't know what's going to happen to this bill. This bill may not happen. And so that may not be the vehicle for the cutoff of the program. But I don't think the conversation about cutting off the program is going away.
Right. They're going to cut off the program at some point, even if it's not this bill. I mean, there's a lot of frustration related to this. It was a pandemic relief program that just keeps on going. One thing that is understandable, there's frustration, Lisa and Mark, that the IRS moratorium almost signaled not to be filing. So that is clearly not the case. That was the moratorium on processing the claims. So our direction, Mark, Lisa.
Yeah, no. The only other comment I would add, Lisa, is that obviously we're raising it on the town hall, but the team is pushing out awareness of this deadline, the potential deadline, through all of our channels, so that people can move very quickly on the legitimate claims. By the way, the conversations with the IRS and Capitol Hill, they know that these fraud issues have nothing to do with CPAs.
Right. So on that, Lisa, we can see the clock. We got 2 minutes here. We got some resources that you and I want to review with the community. I want to thank Nicole Davis. It's fantastic having you on.
Thank you.
Carl, great to have you on as well. And Mark, it's always great to have you on the town hall. So more to come in the weeks ahead. So Lisa?
I will do my super fast talking, but we have some new PCPS resources that I wanted to bring your attention to because I'm super excited about them. 2 different talent-related resources, and you'll be able to learn more about our entire project by clicking on that Transform Your Business Model link, and that'll take you to the talent toolkits as well.
Here's some additional information. I saw some questions coming in to learn more about what happened at the symposium on blockchain. So here's some resources. We've got a blog, we've got a resource center, and we're looking for comments on a proposed reporting framework for issuers of stable coins. So we'll have more to come on a future town hall. One thing, we work hard on our newsletters. So if you are not receiving it, you can go to cpa.com/townhall and make sure you're subscribed to it. Sometimes people have opted out of a newsletter. Make sure if you're not getting it that you're signed up. We also have this auto registering calendaring function. that you can take advantage of. Every time you receive a note about your registration, you can click on the calendar button and get this added to your calendar. Here's who we have coming up on February 1st and February 15th. A lot of great presenters, a lot of great information, a lot of focus, Lisa, obviously, on the tax area. We'll have Aaron Collins from the IRS joining us, the IRS tax advocate, Melanie Lauritsen, who's the VP of tax for the AICPA, and we'll have Barry joining us as well. So here's the on-demand town halls. Leverage them, provide them to other members of your firm. Great being with you this week. Thanks for tuning in, and look forward to being with you again in 2 weeks.
Thanks, everyone.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.